G'day folks, welcome back to another update for gold and silver. Now on the daily charts at least, we've got a potential bullish breakout on both, so we'll keep an eye on those. We're going to include some back testing. Before we go further, make sure you hit that like and subscribe button, and also reference the +1 videos. Remember, these videos are not designed for you to buy and sell any particular instrument at a particular price. We're just showing you the methodology and the discipline in terms of how to trade using the strategies we're identifying here. In terms of the outlook, gold is trading around US $4,000 per ounce and remains supported by global uncertainty, low yields and central bank reserve flows. Geopolitical strains and potential monetary easing enhance its safe haven appeal. However, a resilient US economy, stronger dollar or tighter Fed policy could cap its upside. Silver, trading around $48 to $50 per ounce, is benefiting from both safe haven flows and industrial demand, notably renewables. Yet it carries greater cyclical and supply risks than gold, meaning that while it could outperform in an upside scenario, it also has more downside if industrial demand weakens or macro risk recedes. So first, looking at gold on the weekly chart, we've got the price well above the moving averages, so still bullish on the weekly. However, notice the CCI has broken into that moving average range, which is a bit of a warning sign. We may possibly see longer term a break to the downside, and that's also because of this bearish divergence. We've got lower highs on the CCI versus higher highs on the price, and I've marked there a 23-38% Fibonacci target range, and the way that's measured, we go from that high down to that significant low where the price broke below the moving averages and the moving average band turned down, and that was before this divergence started, and that's at 23-38% range target as a minimum, and more than 90% of the time it hits that. Sometimes it fails. So again, if this price continues to the upside, then that'll be a invalidated divergence. But as long as that CCI remains lower than that point there, and the price keeps rising, we're going to consider that a bearish divergence. That's the weekly. On the daily, now we had a very small bearish divergence here, lower highs on the CCI versus a double top there. You can see they broke right through and hit our 23-38% on the daily target range. Now since then it broke just below it and then it's gone back into that range. Also notice the price is broken above that moving average range, and so is the CCI. Now it's probably a bit early to go long, but you can still take it, and I'll show you the back test on the 1 hour in a moment. Remember, we trade in the direction of the higher time frame, so if you're trading on the hourly, we go in the direction of the daily. So I'll show you two back tests here. The first one will be going short during that period, and the second one will be with this fresh breakout to the upside. And there's no other bearish divergence to be concerned about. So at the moment on the daily, it's a fresh breakout to the upside possibly. Now going to the back test, going short first, and that's from that point we identified on the daily. You can see there are a few going short when both the price and the moving average of the CCI are in a downturn, and closing it out whenever those moving averages start turning up. So you would have closed that out at that point. Avoid trading long or short during that little period, going short again there. Now in this case, the price retraced, but again allowing for a minimal average down, again going in direction of the daily. We added to the position, and eventually it closed out with a nice little gain there, and then we open up another position. Again, reference the +1 videos in the description below. So you would have been taking short trades up until that point according to the daily, and then from that point onwards taking long trades, and what that looks like for a long position. You can see there with a fresh breakout to the upside of the CCI and the price, you would have taken an open position and you'd still be in the trade possibly. Or if you want to close it out early, close it out when the CCI breaks into the moving average range like it did there. That still would have been a nice little gain. And then again, a fresh breakout to the upside there as well. So depending on how you trade that, the CCI gives you an early exit as opposed to waiting for the moving average of the price to break to the downside possibly. So looking at silver, has a similar pattern on the weekly. First off, the price is well above the moving average band, although notice we've got a break into that moving average on the CCI. Also note this slightly lower highs on the CCI here is longer term, starting back early 2024 versus higher highs on the price. We had a smaller divergence back here that hit its target, then it bounced out of there, and this is secondary. Now you can see this one has already hit its target. That's all you need sometimes to hit that 23-38% range. It's already hit it and it's bounced, so that possibly is already executed and completed. Although I'll keep that in there, and that could potentially retrace back to the downside. So the weekly at the moment is neutral to bullish based on that CCI entering into that moving average range. On the daily, You can see there that hit this resistance up here and it's broken to the downside, taking short entries from that point, and more recently with a fresh breakout in the last couple of days, going long with both the price and the CCI breaking higher. And there are no divergence to be concerned about at the moment. The last divergence we had was back here. We had a bearish divergence. Now this one looks like it didn't hit its target. It pretty much went sideways. Let's just measure that again. We'll take it from that high there down to that low. No, in fact, it did hit its target. That's the 23-38% range we measure. So that actually did hit it. And again, it bounced out of there. But at the moment, no divergence to be concerned about on the daily. On the 1 hour period, again, what we look for is first we look for the trends going long on the price. It's still long on the CCI, although it made a couple of little breaks into the moving average. So you would have potentially closed it out on that bearish candle there the first time, and then re-enter it again on that candle, and you'd still be in the trade because that CCI is still above the moving average range. So watching it very carefully. Next thing we look out for is any divergence. Now, those lows on the CCI moving in line with those lows on the price. Likewise, the highs, so there's no divergence. The last divergence we had was back here, a bullish divergence, higher lows versus lower lows on the price. That bounced and hit our target. You can see that 23-38% hit it almost perfectly, then bounced further to the downside, stayed within that range for some time, and it's finally broken out of that range. Now, where we are at the moment on the hourly, we're going long according to the daily, so taking a long position from that point. Now, a couple of things you could have done, similar to gold, staying in a trade until the price breaks below the moving average, or closing it out whenever the CCI breaks into that, and that gives you an earlier exit. You would have closed it out there on that candle once, then re-enter it again there, and then let it run again, and you'd still be in the trade on that one. For some added benefits in terms of share trading, why not subscribe to the Patreon page? And these are some of the trades we've taken and closed out since the 21st of September this year. And in terms of gains, these are all being closed out. So in terms of gains, we've gained 9.67%, nothing since our last update from last week. And we look at bullish shares each weekend. So to get access to those bullish shares, why not subscribe to the Patreon page where we do it on a weekly basis on the weekends. Hit that like and subscribe button. Thanks for watching, and see you in our next update.